Good morning, guys, and welcome to today's edition of the London Session Open. Today is March 31st, 2020, and it's about the 9:48 a.m. in London when we're doing this market update. I have about 12 minutes, 15 minutes to cover the markets, and we're gonna do it now. In the chat box, we have Ugo and we have Dwight Kelly. Good morning to you guys. And also good morning to everybody that's going to watch this recording. If you do like it, don't forget to like the video, and also really important, you can just leave a comment. You can just say something like simple like thank you so much for the presentation, or good morning to you, just something simple like a comment. The reason for that is that it helps the algorithm of YouTube to let people know that you like this, and if you like this, they'll show it to more people, and the more people that watch it, the better for everyone. It also tells me, you know, I'm on the right track. So if you do like it, don't forget to like it and just leave a little comment like a thank you or something like that, or like thanks for the update, or whatever you want to say, as long as something nice. In the chat box as well, now we have Maurizio. Good morning to you. Hope you guys doing well. Okay, good. So we're going to talk about the markets, and overall we're seeing a bit of a move to the upside. We have the German DAX, which is moving up nicely. So a few days ago we said look to buy here. Actually, sorry about that. There we go. I said look to buy here for this to go upwards, which it did. Didn't go all the way to target because we're dealing with an inverse head and shoulders with head, left, and right shoulder. So we still have a bit more to go. And today we're within this rectangle. And yesterday I said this could be a good little spot to buy. We're literally so close to being stopped out, but the market resisted to trade below 94.09. And the position was in play, and we reached the target today. This is a good spot to book profits if you want to. I think it's also interesting because then we can probably trade upwards. This by itself is a little rectangle, slow and low, resistance, take out that high, we can probably go upwards. So why is the market higher? There's a few reasons for this. The coronavirus increases have actually declined a bit. So let me show you how that looks like. And let me see here. If I can load it. There we go. So Italy doing an amazing job, really good job. Look at this. The numbers for Monday saw just an increase of 4.1%. That's the daily growth change. It's a significant decline. Obviously, there's still a lot of people here that got the infection. You're looking at 4,050 people. But just sort of show you very simply, this is the daily number of people getting the infection. You see here at one point we got 6,557, and now the latest reading was for 4,050. And on a percentage growth basis, we're going down and down and down, and that's exactly what we want to see. And that's exactly what happened in China. So in China we had similar readings, and now the Italians have been under lockdown for 22 days. Give it another 10 days or so, we're gonna go down to significantly lower levels, and this is actually looking really, really good. France, unfortunately, sort of moved up a bit on Sunday. They had a good little outcome of 7%. Now they had an outcome of 11%, which is higher, but numbers-wise is still slightly lower. And this is, I think, the important number which influences the markets substantially, and it's actually the US. So you can see here that the growth change of new viruses in the US was a total of 20,000. But just a 14% increase, which is not a lot. I mean, it's not a huge difference between 14% and 11% compared here with France. Spain as well, which is having a lot of issues. They're actually struggling a bit. They were at 9 on Sunday. Now they're back at 10. Hopefully we can have more of an impact here. The Spaniards have been in lockdown for 17 days. We have not seen the same growth as we've seen in Italy. But actually, let's see here, 17 days. Yeah, on the after 17 days of lockdown in Italy, they had an 8% growth on that day. In Italy, in Spain, they had 10. So it's not a huge difference, but hopefully, maybe give this another week or so. Hopefully we'll be down, you know, at the 5 or 6 as we have in Italy. And then Germany is doing a really good job as well. They're down at 7%, and they have been under lockdown for about 11 days. So things are definitely going in the right direction. And what's quite interesting is this. On the 19th, the markets bottomed out, okay? On the 19th of March. On that day, Italy had a 15% increase. France had a 20 the US had 51. That was the highest daily increase here for quite some time. Obviously, if you go back, you had a 95 increase in February 24th in the US. Otherwise, this was the highest number. And as well, I think in Spain, well, Spain actually had slightly lower, but this is interesting. So pretty much when, and in Germany here as well at 29, actually on the 19th, Germany had a 73% increase. So when the markets bottomed out here on the 19th, we had the worst numbers in Germany and the worst numbers in the US in recent weeks. Of course, if you go back from the very beginning, you'll see even worse numbers. But from that perspective, those were the worst numbers, and that's when the market was at its lowest. And what we're seeing here is nothing special. It's very typical, and it's something I even addressed in this webinar here. And then I did another webinar on the coronavirus, comparing that with SARS, and very, very similar price action. So for now, things are looking good, but it's not just that. We have some numbers. Let's see if I can find it now. So we had numbers. Yes. Sorry, here. Numbers from China. Look at that. These are the official manufacturing figures. Now you can see here how the reading was 29.6. The market totally disregarded those numbers. Well, at least initially. And you had as well the manufacturing sector figures. Now the outcome was 52 manufacturing and 52.3 in manufacturing services. Some people, market economists, said forget about the number. 1 month later, so the numbers are going to bounce back. And this is exactly what we're seeing. We're seeing a total bounce back according to these leading indicators. Now, there are other indicators. The Financial Times compiled their own indicators. We'll look at the coal consumption and traffic congestions, air pollution, and things like that. And they show that the economy has sort of is still sort of not a full percent. It's still lacking a bit compared with what it was in 2019. So still a bit of a gap. So it's definitely not at 100%, but it's definitely recuperated more than 50%. I think it's about 60% or something like that. 70, I think it is. And these numbers are telling us that the Chinese economy recuperated fully. Now on April 1st, we're going to have this one. The CAC manufacturing PMI is going to be up at 1 or 145, and it's also going to be really interesting to see how this number prints. But the way things are looking now, you shut down the economy. Of course, a lot of people lose money for like a month or two. They don't make any money. In fact, some people lose their jobs, and their jobs are not going to be created again, not going to come back. But look beyond that and think about the fact that all the governments are pushing so much money into the system. The US is putting like 10% of GDP into the system, plus you're letting people to go back to work, and you suddenly start to see the machinery working again. And I think what's happening here, when down here, is that people sort of, for some reason, and this is very, very typical investors, they sort of assume that the current bad situation is going to persist for a long, long time. I'm telling you right now, it's not going to be like that. A simple, silly virus can't fight us humans and our ability to survive. Come on, guys. How is a virus going to beat us? That's just ridiculous. We're going to beat the virus somehow, and we're going to get our economy back, and everybody's going to start to go back to normal again. There's no way we're going to be contained. We're going to be very, very clever about it. And we just need to remember this. So obviously, at one point at the low, no one is going to buy an iPhone. No one is going to buy this. No one's going to buy that. Fast forward a year or two, and we're going to be back buying stuff as before. So, and it would have been different, as I said before. If this virus was different, it just killed young people, then it would have been a different ballgame, because the younger people, they're the ones that are out working and obviously paying in taxes and stuff like that. And that would have been a total different ballgame, but it's not like that. So it's not the working population that is getting knocked out. And from a purely economic perspective, we will definitely overcome this. So this is what's happening. Chinese data much better than expected. Sort of unofficial numbers, looking at how the situation in China is developing, it's looking good. And the number of cases of coronavirus cases in the world is diminishing because of the lockdowns. So things are looking good. Of course, in the short term, we don't know about the second round effects. So what's going to happen now when people go with no work in 2 months? Are these businesses going to shut down? That's the challenge. But for now, some people have been buying and the trend remains bullish. So again, from a purely technical perspective, the DAX is bullish above 9,409, and we can take out the high. We can probably go up a bit more. I wouldn't really be buying here. Rather, this is just to keep this one for a bit longer. If you really want to, though, you can buy the breakout to the upside. Just need to be difficult. I think it can go up a bit and then go down and then come up again. If you look at something like the S&P 500, the S&P 500 yesterday, we talked about buying down here, actually down here. We talked about buying here. That went really good. We talked about buying here. That went really good. And I'm going to track this trend. Of course, if non-farm payrolls or other numbers on Friday come out horribly bad and we take out the trend, I'll accept that for now, at least people are not going to be buying. But for now, the trend and the data are aligning themselves. And looking at the S&P today, we know very close to the highs. We can easily just take this up. We can probably go higher. But for fresh positions, we need a pull back to 2,543. As well, don't get worried too much if you actually missed out on the initial move. Maybe we'll just go up, 2,900 without stopping. But most of the time, you tend to have a little bit of a pullback. So I wouldn't get too worried. There's just sometimes, like here, like even here, for example, this is in 2009-18. It just went down and down and up, and then it went up, and then it went down. But if you didn't get on board here, you lost it. Because the market after that just continued to trade upwards and upwards, and it did so 17% really. So let's take a look at crude oil prices. So these are crude oil prices, and the market is up a bit, no doubt about that. But the trend. So yesterday we're trading down here, and I said the markets are probably going to roll over, so people are probably going to sell here. And then we're going to go to the downside, potentially go reach 19 level. I'm sticking with that idea, and I think we can probably go down. So I'm going to continue to be bearish. We can, of course, go up there, but I think people are going to sell. Stop loss orders are still going to be around 23.38. If you look at gold prices, they're very, very boring. You do have a bit of a short-term uptrend. This is your 4-hour chart. And you can see that there's a bit of an uptrend above 1593, and one could buy here to attack the high, but it's not my preference. If you look at this from a bigger picture perspective, there's not a strong trend. And if we do take out something like 1593, take that out, we could probably go a bit lower to 1558, okay? In the case of currencies, this is your euro. So a few days ago, we said, look to turn bullish from these levels. The market did go to our advantage. We moved up the first leg, and then we said, look to book profits somewhere here. Then the market just continued, and we wanted to buy a dip. The dip didn't go low enough for us to get involved, but now we are at that spot. We are in the entry spot, the buy area of this uptrend. So I'm going to continue to be bullish in this little spot. Then I'm going to be bullish for 108.94. This is the GBP versus the USD, where we're also dealing with a bit of an uptrend, and I think we can probably go a little bit higher, but I wouldn't be buying here. We haven't really corrected a lot. I want this to go down to 21.82, and then from here all the way down to 18.67. I'm going to be bullish. Here is your dollar yen, and a few days ago on the 18th of March, I said people are probably going to sell here, and then I said they're probably going to sell up here, but we didn't go all the way up to the take profit level. We did, however, though, that got an entry, and that got a bit of a was up a bit. Now we're moving back up into the sell spot again. Now what I've done here, as you might remember, the sell spot was slightly higher yesterday. I push it down with about some 20 pip or so, so we can get that entry. And if we go up to 108.59, I think we can probably continue to trade lower. Now I know there's some questions here. Fortunately, I need to wrap things up. I'm just going to see if I can quickly see. I don't think the markets are backward looking. It's just that people, when things get really, really bad, people get too excited and they sell too much or they buy too much. Because all the companies, you probably heard of the PE ratio. So the PE ratio is the price versus earnings. So almost all stocks are trading at a PE of, say, 15, some even up to higher. So if it's 15 or 20, say 20, then that means that the company of the stock is trading at 20 times earnings, 20 years of earnings. So the price of, for example, I don't remember where Apple is now, but imagine the Apple is at 20. So the value, if you want to buy back Apple today, effectively, you need to wait 20 years to get all that value back. So what is happening is that the price of Apple is considering what's going to happen in 20 years. So what people tend to do is that they have maybe an outlook for 1 or 2 years, shorter many times, and then they take that, they multiply that, and then they sort of like, now everything is bad, so everybody's selling, right? Very straightforward. And then so the market exaggerates to the downside and exaggerates to the upside. Thank you so much, John. Thank you so much. Okay, so I need to unfortunately leave you guys because I'm receiving my daily call here at 10 o'clock London time. But I gave you a little bit of bits of information. Hopefully that can help you with your trading. We do have some data coming up. I don't know how people are going to react. The outcome for the non-farm payrolls is just for 100,000 decline. I mean, we had initial jobless claims, which are 3.5 million. I mean, realistically, they would have said maybe non-farm payrolls down with 500,000, but obviously they're not. So the market might be a little bit too bullish tilted, but we'll see. I don't know exactly how the market's going to react, but if there is a situation here where they react by selling, then we do have the stops. We do know exactly what to do in that situation. But for now, people are optimistic, people buying a bit, and that's causing stocks to go higher. Have a good day, guys, and I'll see you guys tomorrow at 9:30 a.m. London time. Thank you.